Welcome back to Everyday Economics, the podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, CEO of the 501c3 nonprofit Franklin News Foundation. Everyday Economics, production of America's Talking Network, and you can check out all of our terrific podcasts at americastalking.com. Support podcasts such as this one. Please make a tax-deductible charitable contribution by clicking the link in the show description. We are recording this episode on Friday, September 6th, and joining me as always, Dr. Orphe Divounguy is a PhD economist and an all-around good guy. Dr. O, I think your column in the Center Square every Monday is can't miss. I mean, you map out what's going to go down in the week ahead, and you've been doing this now for, I don't know, a couple, 3 months. It's fantastic.
Well, thanks, Chris. I mean, the thing I'm the most proud of is getting it right.
Yeah.
Right? Yeah. I think, my headline this past week was, something like, is the labor market deteriorating faster than previously thought? Something like that. Then we get a jobs report where basically we learned that there were 2 downward revisions in the previous months. Employment growth is slowing, and the truth is, in that piece, I really explained why employment growth has slowed, but I wouldn't call it a deterioration.
Yeah. Okay. Fair enough.
Not quite just yet, because employment growth is also a function of population growth and the increase in the size of the labor force, and the size of the labor force is stalling.
Right.
And if it's stalling, even without a change in the hiring or separation rates, you're going to get a slowdown in the number of people finding jobs.
Yeah.
So that's exactly what's happening. But yeah, this week we got a bunch of good stuff.
I got my cheat sheet right in front of me. And so here's what's on the calendar for the week ahead. On Monday, we're going to get consumer credit update, right? On Wednesday is the big one, the one that you and every other economist is kind of waiting on. It's CPI and core CPI come out on Wednesday. Thursday, we'll get an initial jobless claims number. And Friday, for what it's worth, and I think it's valuable because, you like to say, and I fully believe, the economy isn't money or numbers, it's people. Consumer sentiment comes out on Friday. So I'm assuming you want to jump right to CPI.
Yeah, well, we consumer credit's actually increasing at a decent pace. Yeah, has been increasing
at a scary rate. As far as I'm concerned.
Yeah. Look, income growth has been surprising on the upside also as well.
Right.
And so if your income's growing, you might actually not be too worried. I think what I worry about is the fact that ultimately the savings rate has gone down so much that Americans aren't saving as much.
We are consumers, man. We like to spend that money.
That's right. Now you got, I think also another thing that perhaps might surprise some people is that Tuesday we're going to get the NFIB, right? The NFIB basically has a small business optimism index, right? Main Street. And their survey is showing like small increase in small business optimism. I think that might actually have increased again last month. Yields fell. The stock market rebounded from the early month low. Financial conditions have eased. And so that might actually have rebounded somewhat, and so we'll see that on Tuesday. And then, of course, the main event is going to be the consumer price index. And you had a 0.2% increase last month. I think you might see the consumer price index increasing roughly at the same pace.
Okay.
On a monthly basis, maybe even rebounding, going up slightly on a monthly basis.
Okay.
But you'll probably see that on a year-over-year basis, it's stuck or easing only slightly. So I don't expect a big decline in inflation. In August. So so yeah, I will see those numbers come in, and roughly inflation is moving in the right direction, but very slightly, very barely, at a very slow pace. And so again, that's what we're going to see. You'll be surprised. You might not be surprised after you hear those comments to see yields stop their decline essentially and kind of tick a little bit higher. We know, I think the Fed expectations are pretty much priced in. Everybody kind of expects 25 basis points. You might see that people might start to think, oh, maybe 50 basis points, because you see the labor market is slowing faster than expected. And if they start to move in that direction, they might be a little bit disappointed. And so, yeah. And then we get to Fed decision, right? So when is the Fed decision? We're going to get Fed decision.
I think it's in 2 weeks.
Next week?
It's not
in
next
2
week,
weeks, right? We're gonna get the Fed decision, and you're gonna see a lot of volatility in the market. But yeah, the CPI is gonna be the main event next week. You're gonna probably see markets moving in all types of directions as a result. But yeah, I don't expect a big decline in inflation like most people think. I think people are looking at the labor market and thinking, oh, the battle's been won on the inflation side. The labor market's what we need to focus on. It's true, but inflation easing is going to be is still a slow process. It's not the big decline that some analysts are expecting, right? It's going to be a slow process to the 2% target. We're going to see, right? We're going to see. So 0.core CPI has been pretty much stuck, I think.
Not a lot of movement. I mean,
I don't see it. I don't see it. It's moving in the right direction, but it's moving there very slowly.
Yes,
is I think what people need to take out of this.
So I mean, I think that a lot of people want to try to draw the market, the stock market, into any number that they can, and to try to rationalize it against, the other data that's coming out. This was a pretty tough week in the market. Any correlation at all? Anything? Any reason why the market moved the way that it did? And it was downward this week. It's a tough week for investors.
Yeah. I mean, it's exactly in the long run. A company fundamentals are all that matters,
right,
for whether people are buying or selling stocks. But in the short run, it's all about news, economic news, and company announcements, right? Those are the things that move stocks in the short run. And so you look at the economy, you look at the fact that you're going to have, so a lot of companies are done with earnings. You look at the economy, you got the fact that inflation is slowing, but that there are growth concerns. You get some pieces of data that show basically the economy is crumbling, falling apart. Leading indicators are like, oh, but those leading indicators have been telling us the economy was falling apart for almost 2 years now. Right. And then at the same time, you look at lagging indicators, and lagging indicators tell you everything's fine. Right? Things are moving. They're slowing, right? The momentum is headed in the wrong direction, but everything's still fine.
Yeah.
And that's why people get spooked, I think. And so you see the volatility, the market volatility.
Well, I appreciate your thoughts as always. For Dr. Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics at americastalking.com.